Hi, welcome to my channel Pivot Points with RK. This is Ramesh Krishna. Today we will discuss about a powerful trading strategy which can be used on a daily basis on a day trading. So how we can use this strategy? Let's discuss about this. It's about exponential moving average, also known as EMA. An exponential moving average is a type of moving average that places a greater weight and significance on the most recent data points. The exponential moving average is also referred to as the exponentially weighted moving average. An exponentially weighted moving average reacts more significantly to recent price changes than a simple moving average. Simple moving average, which applies an equal weight to all observation in the period. The EMA is moving average that places a greater weight and significance on the most recent data points. Like all moving averages, this technical indicator is used to produce buy and sell signals based on crossovers and divergences from the historical average. Traders often use several different EMA lengths such as 20, 50 and 200 period moving averages. So in my trading strategy, I use all these three 20, 50 and 200 period. So this can be applied on 5 minutes, 10 minutes or 15 minutes or even half an hour daily strategy. If I'm trading with Nifty and Bank Nifty options trading, it's always better to use it with 5 minutes 5 minutes chart. So let us see in the chart how we can see how we can get the buy and sell signal based on this three average periods, exponential moving average period. One is 20 period, 50 period and 200 periods. See, this period is nothing but whatever period that you apply. If you select for 5 minutes, this 20 of previous 5 minutes, 50 of previous 5 minutes and 200 of previous 5 minutes. Same way, if you select 10 minutes or a day, 1 day or 1 hour, whatever it is, if you select 1 hour, so this 20 minutes will be for the previous 21 hour candles. So likewise, this 20, 50 and 200 is nothing but the previous periods. Based on that, it gets derived and plotted on the chart. Let us see how we can use this 20, 50 and 200 period moving averages for our day trading. See, this is the Bank Nifty chart. So let us see today how did it work. Today, see, this the red one is 20 EMA and this one is 50 EMA and this one is 200 EMA, and there's a perfect combination. When the 20 EMA is top, 50 EMA is below 20 and 200 EMA is below these two. Whenever we get a good signal, we can always take a trade and it's always going to give a good result. Let us see how it worked today. See, today it opened gap up. Today, that means 29th of November 23. So today it opened a gap up here and it started coming back, moving towards the moving average. So the moment it opened gap up, we'll have to wait until it comes back to moving average and 20 moving average. And when preferably this green candle, this green chart, which is 50 EMA, is below 20 EMA and it's above this 200 EMA, it's always a very productive and very positive signal. So whenever it moves up and comes back towards 50, this 20 EMA, whenever we get a good signal, something like this, a red signal and a green signal or positive signal, bullish candle such as hammer or bullish engulfing, something like that. When we get those kind of a signal, we can always take a trade. See here, after a green candle, when it tries to come back towards 20 EMA, it did not cross 20 EMA. So it took a positive candle and that's bullish candle. So it started giving something like this. When we take a trade above this was a resistance here. It took a resistance and came down towards 20 EMA. When we take a trade above this level, For example, let's try a horizontal line here. If we had taken a trade about this, keeping the stop loss below this 20 EMA, for example, so let us see what is the distance between this and this. If I had taken a trade here, my below this, preferably this, assuming 81 points on the Nifty, on the 81 points on the Bank Nifty chart, 81 points, preferably an option, it could be 40 points. And same target, 1:1 or 1:2, I could always expect. For example, if I take my target of 81 point, the first target could have been here, the first target could have been achieved here, and same way if I had waited and extended my stop loss, if I had brought up my stop loss here, and I could have, if I had waited, I could have made a big profit here. I mean, this is how we should trade. So this is how this 20 EMA works very positively. Look at after this, again it started moving up. So after once we achieve a target, again we can wait until it comes back to 20 EMA. You see this, it went down after, and it did not give a powerful bearish candle here. So possibility is that again it can go back after this bullish candle. If you see, after this bullish candle, again it started moving up and here. So even if you keep 1:2 target, risk reward ratio of 1:2, one part of risk and 2 times of reward, which if you've taken 40 points risk, 80 points could have been the profit. Say for example here, if I had taken about this, my stop loss could have been below this, which is 60 points in the Bank Nifty chart. I could have taken nearly 120, or say for example first target could have been here in this candle, and the second target could have been trailed likewise. So that's how this 20 EMA and this combination with this 20, 50 and 200 EMA average, we can get very good signals. See, today, since it was trending day, it's almost a 685 points upward movement. It started moving. When it goes away from 20 EMA, it always tries to come back to 20 EMA, and after we see some good bullish candles, something like a bullish hammer, bullish engulfing, something, those sort of candles, we can always take a trade about this. Let us see in the previous chart. Even yesterday, if you see, again yesterday, it opened gap up, but it did not sustain. It came back towards 20 EMA. If you look at this candle, here it came down to 20 EMA, it touched 20 EMA, but it did not give close below 20 EMA. But this was a perfect bullish engulfing candle. This candle is a perfect bullish engulfing. See, this is bullish engulfing candle. Sorry. See, this is a bullish engulfing candle. It's a perfect bullish engulfing candle. So let's rub it off this. This is a perfect bullish candle taking support at the 20 EMA, and if you take a trade above this candle, high of this candle, keep stop loss below this candle. See, 1:1 target could have been easily achieved here. See, this was the nearly around 51 points stop loss, and the target could have been, the first target could have been here 51 points, and you could have trailed your stop losses for another 51 points. See, did not even touched the trailing stop loss also. Below this point, if I had brought up my trailing stop loss towards this, my purchase cost, this has not hit the stop loss. So if you look at this chart in the trending market, this EMA strategy works so better. So we just have to wait. If it has gone beyond 20 EMA, we'll have to wait it come down towards EMA, and we should see the price action here at EMA, 20 EMA. What is it going to do? If in case it crosses below this and gives a close below this 20 EMA, accordingly we can take a strategy in the short. Since if it doesn't cross, if it doesn't close below 20 EMA, if it takes support and starts going towards upwards, then we will see the price action candles like this hammer candle or bullish engulfing or whatever positive and bullish candlesticks patterns. Accordingly we can take a trade. See, it has gone up and again it came back, again another bullish engulfing form here, and again it started going up. Likewise, if you could see here, it took a support again here, another. So likewise, so at least some 3 to 4 times we can take a very good trading opportunities here. So this EMA trading strategy is very simple in nature and it works very well. Let us see some chart patterns in the downtrend also, how it worked on a downtrend. See, the advantage of having another 50 EMA below this is like this. See, this 50 EMA here, after closing below 20 EMA, when it closes below 50 EMA, there is an opportunity for the downtrend here. But as we always say, trend is your friend and we should go with the trend. As this was a bullish trend, we should always look opportunities for a bullish trading. See here, it just came down again, it took a support and it started going up like this. So this is how it's going to work beautifully on this moving average. Simple yet very powerful opportunities you will get. See, look at this. Here the 20 EMA was crossing over the 50 EMA. There is a perfect moving strategy, but since 200 EMA was above all this, so we should always look opportunities for a downtrend. See here, there was no opportunity at all, so we will skip those. See here, a perfect downtrend. 200 EMA was above all this. Below 200 EMA there was 50 EMA and 20 EMA below 50 EMA. When you look at this, here are these few good opportunities to take short positions. That means we can short the futures, or we can always buy put options. See here, this is the 915 candle. There is a big wick on this. We will wait, even though it has given a close below, but there is big wick, so we will wait until it crosses this wick and we will see how the opportunity is there. So since the wick was so big, we don't have to take a trade. We just have to wait until it goes and touches the 20 EMA, and we will see the price action at 20 EMA. If you look at this 20 EMA, it did not give a positive close above this 20 EMA. Since the 20 EMA is below 50 EMA and the 200 EMA, we will wait for an opportunity towards the downtrend. If you look at this, since it didn't give a close, but it gave a hammer candle, it's a reverse hammer candle on the top of the nation. So we can take a trade below this candle and keeping a stop loss on the above high of this hammer candle. Look at this, how it has started going moving down towards. So by trailing stop loss, we can achieve a better target. At least 1 is to 2. If we get such trade, 1 is to 2, even out of 10 trades, if 5 times you are successful and 5 times your stop losses get hit, still you will end up in making profit of at least 5 times. Out of 10 times, even if you lose 5 and your winning is 5, since your risk reward ratio is 1 is to 2 at least, minimum 1 is to 2, if if you know how to trail stop losses at proper stop loss, and if you can control your emotions, you can always even make a big profit. See, this is a perfect EMA downtrend strategies. And all the 200 EMA, 50 EMA, this black one is 200 EMA, green one is 50 EMA, and this one is 20 EMA. Whenever we get below, close a candle closing below this 3, just be touching this 20 EMA below this, whenever we get an closing below this, that's a very good opportunity. We can always take a trade with that. And remember to have stop losses, proper stop losses with every trade. Every trade is a risky trade, because we know in the live market anything can happen after the trade is taken. Either it can go in our direction, against our direction, or it can just remain without change. So it's always good to have a proper stop loss. Keep your stop loss intact, take a trade, and at, also try to maintain a the record, that how many times that you have taken such trades and what was the result of that particular trade. So entry, exit, and stop loss, these three are most important in every trade. Wait for the opportunity, see how the candles are getting formed at the support and resistance level, and since these EMAs are very good support and resistance, dynamic support and resistance, we will see the we will wait until the candle closes. Only after that we can take a trade, and the stop loss should be properly put. Only then we can become a successful trader, a day trader. And remember that you should always trade with stop loss and trade minimum number of times. Do not overtrade. Wait for the opportunity to come. Trade only then accordingly. See, if you could see likewise in a chart, just run through your charts. So likewise, we'll get a lot of such opportunities, especially in a trending market. In a trending market, moving averages works better. In sideways market, the moment we see if it's not crossing any of the resistance or support, we will just do not trade. We will not take any such trades. We will wait for opportunities. There will be a number of opportunities in the market. Even don't have any kind of fear of missing opportunity. Have no FOMO. Even if lose trades, don't hurry. You will get a number of opportunities every day. So just wait for your opportunity and mark your levels, your support and resistance levels. Wait for the opportunity. See, like this, when it comes and take support of 50 EMA and move above 20 EMA, take the trades. See how big profits that we could make. So this is how, by using this EMAs, we can do simple trading and we can make good profits. Remember, stop losses and profits are all part of the game, except your stop losses in case if it gets hit. And also enjoy your profits when it starts moving in your direction by trailing the stop losses. So trailing the stop losses is something just very simple. Whatever stop losses you taken, the moment it starts moving upwards, you try to bring your stop loss to the cost of purchase and wait again and the next candle closes above the other candle, then bring your stop loss to certain profit level so that your profit is getting intact. Even in case if it starts coming, if the trade is going in against your direction, you will not lose money because you already put your stop loss at above your cost level. At least you will take home some minimum profit. So learn how to trail your stop losses, control your emotions, because it's not so easy while you're trading to trail the stop loss, because the way it moves, especially the option prices, the way it moves, it's very difficult to control EMA. But it comes by practice. Remember, everything comes by practices. The way you practice, the way you control your emotions, that becomes your habit, and you will trade fearlessly, and you will wait for your opportunity. That's how what it does. That is the purpose. I mean, that's the main advantage, that your psychology, your trading psychology, because strategies are only 20%. It's not that every day you keep waiting every day to trade with this EMAs and you get everyday profit. No, it's not so, because in the live market anything can happen. Even after getting a close, it may just go against your direction. So prepare your mind for stop losses, wait, control your emotions, and take a proper trade. Our entry should be proper, and similarly your stop loss should be proper, so that your entry and stop loss, if you have taken care of your entry and stop loss, profits are always expected. And you exit, you decide what is the profit you need, 1:1 or 1:2 or whatever it is, 1:1.5 or whatever it is, and wait and start accepting the stop losses. Then your mind becomes strong and you will start trading better. Okay, that's all for today. Let us keep learning and keep trading. Subscribe my channel for instantaneous, I mean, for more updates, and join me for daily live trading sessions between 9:32 and 3:30. And you can also see how I'm trading, how I make money, or even how I lose money, how I accept the stop losses sportively. You can learn and stay together, stay connected. Okay, subscribe my channel. Thank you.